In today's video, I'm going to recreate one of the setups that we had in the trading room today, and it was also put out on an alert, and it was in the NASDAQ futures. Okay, so let's go back to what was going on this morning. We finally had started to see a bit of a pullback. So since the overall pattern was still bullish, I wanted to run the symmetrical projections of these prior declines from any new high to look for possible support. Now, some of those zones were violated, but others were not. And let me show you what gave us this cluster that I did actually put out. And let's see, one of the swings came from here. This was a decline of 62.25 points. Another of the swings came from here, which was 61.25 points. Okay, so as we started pulling back, yes, we did break down below some of these other areas, but we tested and held the area that I put out at 71.38 to 42. Now, all that really consisted of was two symmetrical projections plus a 618 retracement of the prior swing, or a prior swing, and those, overlap together. So what do? Are you supposed to just buy it when it hits a zone and then place your stop underneath it? Some people do that, but I like to wait for a trigger, and that's the way that I teach my traders. And what we had here was a test of that area. Actually, the low was made at 71.42.25. But you may ask, well, then what's a trigger? How am I supposed to get in? So I'm going to show you. You want to get involved with a lower time frame trigger that basically tells you that it's worth placing a bet against a particular zone. Okay, and if you see such a trigger, then you know that your risk can be defined either underneath the low that was made prior to the trigger, or underneath the low end of the zone, which in this case would be underneath 71.38. So here, what we like to use for the day trading is a tick chart. All right, and this, in this case, I'm using a 144 tick chart. Some people will use 233, some will use other numbers. But the bottom line is that you want to see a couple of things for a trigger. You want to see the moving average crossover to suggest an entry, and you also want to see a pattern shift. And from the pattern shift, I'm talking about that it changes pattern from lower lows and lower highs to higher highs and potentially higher lows. Okay, so where did it trigger an entry? Well, this is on the 144 tick chart. You can go back to where we had tested that support. That was right over here. And there were actually a couple of other triggers too, because there was a squeeze trigger over here that came a little bit sooner. But here's where you had the 834 EMA crossover to the upside. That's one component of the trigger. The other component is I wanted to see it take out a prior swing high besides just have the moving average crossover, and that occurred when we took out this prior swing high. So if you look at this, your initial risk, well, actually, let me show you where it would have been triggered. Right around, the trigger would have been right around the 71.48 area. And your initial stop could have been placed underneath the low, which is underneath 71.42.25. So, 71.42 or 41 or something like that. That's not a ridiculous amount of risk when you're trading futures, okay? And, this obviously ended up playing out fully today because, well, let's go back to this chart. We hit, we held, we triggered around the 71.48 area, and we did, after a little bit of a pullback after this initial run up, which was, let's see, that low to this high was 49.75 points, and then you did have a bit of a pullback, but then we resumed the rally and then met the initial upside target, which is the 1272 extension of the swing into the zone. And if you kind of mark that off from where that low came in, that was an 80-point rally. Okay, so 80 points times 20 bucks per, single contract in the mini. There's a lot of potential there. And the risk was clearly defined underneath here. And, that's what we like to do as far as, taking trades, whether they're day trades or scalps in the futures.